want to talk today about mortgage rates and inflation, how they go hand in hand, what do they mean? So let's dive into what inflation is. Inflation is the increase in the cost of goods and services over a period of time. You've heard in the news a lot lately about how our inflation's gotten away from us. The Fed is doing everything in his power to control and tame inflation and to get it down. And that's because through the pandemic, the cost of goods and services has gone up. We've had a worker shortage, we've had supply chain issues, you name it, the cost to get the goods and services has just gone up. And so inflation, the cost of living has gotten very expensive, and our Fed is trying to get that under control. But what does that mean for our mortgage rates? Well, the mortgage rate is the cost of buying the home. So when you are borrowing the money to buy the home, when you need to take out a mortgage loan, you're going to pay an interest rate to get that loan. And that rate is influenced by multiple factors, but one of them is the cost of inflation. So as inflation goes up in some form or fashion, the cost of borrowing money on a mortgage is going to go up as well. But other factors can influence the mortgage rate. It's not just inflation and what the Fed is doing. The Fed is affecting the borrowing cost to borrow money from the banks. And that's in the commercial world and private sector. He's not affecting the actual mortgage interest rate. Our mortgage interest rate is really controlled, like I said, by multiple factors. Inflation and what the Fed does is one of them, but it also can be what's going on internationally in different countries as far as wars go. So right now we're seeing problems in Ukraine, problems now in Israel. That uncertainty, that instability can affect our rates. Other things like unemployment rates can affect the mortgage rate. Government policies can affect our mortgage rate. And then the mortgage rate is also closely tied to the 10-year Treasury bond. So there's a lot of things that influence that rate, and that rate can really vary day to day, hour to hour. But over time, we see a trend. And the trend we're in right now is that the mortgage rate is going up. It is expected to go up a little bit more between now and the end of the year. And then hopefully we'll see things settle out and our stability financially overall will become better. Inflation will come down even more, and we'll see those mortgage rates coming back down, hopefully in 2024, perhaps in 2025. But there are options. Just know that you don't necessarily have to settle for the interest rate that you see today. There are options to look at. So check out my other videos to understand the options.